All right. Looks like we are live. Can you let me know in the chat that you can hear me well? You can see the MarketSmith screen. Once I get some confirmation in the chat, we'll go ahead and start breaking things down. But just a little bit of an intro. My name is Nick Drendel. This is the first time that I'm doing the live stream in, I want to say, about 5 months. It's been a while now. And what we're going to be doing today is just going over the general market. We'll go over the indexes, the S&P 500, NASDAQ, IWO, ARKK. Hey, Randy, thanks for checking in. Let me know if you can hear me well. But we'll go over those indexes, see where the market's at. I have a list of leading stocks, and like you saw from the thumbnail, there's really a divergence between the stocks that are leading the market and what the indexes are doing, and that's called decoupling, and typically that's a good thing for the market going forward. After that, we'll quick run through some of the stocks that I'm holding, the stocks that are on my watch list for the second half of the week, and then also any charts that you guys want to go over with any time that we have left. Shooting for about 1 hour on this live stream. So usually, at least when I did this before, about the last 30 minutes, 25 minutes, were just chart requests from you guys. So depending on how quick we get through the watch list, we'll get to as many stocks as we can. And also along the way, if you have any questions about what I'm covering on the chart, any questions about trading in general, throw them in the chat. I have the chat up here to the right. I can see exactly what you guys are saying. I could even type in, hello, Mr. EC. See, exactly. So go ahead, utilize that chat as much as you can, and then we'll get started in 1 sec. Also, wanted to reach out to anyone watching right now and anyone watching the recording. I am putting together a new series that I want to put out either once a week or once every 2 weeks. We've already seen all the Dave Ramsey financial audits, but we haven't seen many trading audits. So if you're interested in that, you can email me at stocktrickswithnick, stocktrickswithnick@gmail.com. The link's in the description below as well. And what we'll do there is we'll take your last 20 trades, do a one-on-one consultation, and make a YouTube video about it. Because if you're having those kind of questions and if you're making similar mistakes in your trading, chances are a lot of people are as well. So I think that would be a really cool series. So if you're interested in doing that, stocktrickswithnick@gmail.com. All right, with that said, this live stream is going to be sponsored by MarketSmith, which is the trading research platform that we're going to be using to break down all the indexes, the leading stocks, the stocks on my watch list, and any stocks that you guys want to go over. So if you guys are interested in using the platform yourself, there's also a link in the description to that. And a big thanks to MarketSmith for sponsoring the video. All right, let's go through this. SPY. Right now we're going to go through the indexes. So S&P 500. We rallied up really quick rally up to the 200-day simple moving average. We got over that in the first bear market rally. I think that was in March, a little bit over the 200-day. QQQs got 1 day over the 200-day. We'll cover that in a second. But this was kind of a perfect touch. And then quickly we declined through the 8-day. Let me change this to a tracking price. Through the 8-day EMA, and then we gapped down on Monday. We actually gapped down on Friday as well a little bit, but a substantial gap down on Friday and gap down, and we didn't even attempt to rally. So that was a little bit concerning that the indexes were gapping down. But that day, if you looked at the leading stocks, ENPH, CELH, SWAV, a lot of the stocks that we'll cover in a second here, they were holding up really well. So what that tells me is even though money is flowing out of the indexes, it doesn't mean that the money was flowing out of the entire market. The money was flowing out of the indexes and into these leading stocks, which is exactly what you want to see if you're a swing trader like me who is trying to position themselves in leading stocks. So we got that what's called decoupling action, where the individual stocks are kind of acting on their own accord while the indexes either pull back, go steady. We saw that Monday, we saw that Tuesday, even today, SPY up 0.3%. A lot of the growth stocks, a lot of the leading stocks continue to push higher. So that's great action, even though the index is not really showing much strength here. So even with Monday's gap down, we closed under the 21 EMA. Same with Tuesday, same with today on Wednesday, closed just under that. But today's rally 0.3%, came on very light volume, 42% less than the 50-day average there. So we're still in wait and see mode. This market could go either way at this direction. We're just trying to gather evidence and see if we can get any setups working for us. So that's S&P 500. Next, we have QQQs. This tracks the NASDAQ 100. Like I mentioned before, on the previous bear market rally in March, we had a 1 day where we popped over that 200-day moving average. Looked like we might build out around there and then get going. That was not the case, unfortunately. We pulled back, tested it once more, and then got that confirmation that it was time to get out of the market. And we got that gap down. So this is what I'm also kind of a little nervous of. We got that gap down, 3 days of consolidation, and instead of bouncing, we gap down again. Could that happen in this market? Absolutely. But the number of stocks that were breaking into new all-time highs back in March versus what we're seeing right now is vastly, vastly different. And that's usually a good sign. Even if some of the leaders need a week or two to relax, kind of pull in on lighter than average volume, kind of get supported there, that would all be constructive action, even if the indexes were to move a little bit lower. Looking at what we have now, we had a small gap down on Friday, gap down on Monday, right at the 21 EMA where we opened up, and then we just rolled lower. I think that was down 2.6% that day. And then similar action to S&P 500, just sideways action this rest of the week. One of the ETFs that I really like to cover is IWO. That's the growth ETF, Russell 2000 Growth. And that's painting a little bit of the type of picture that the leading stocks are showing. This pulled into the 21 EMA and got supported at that area instead of the NASDAQ and the S&P 500 rolling under that area. This was green on Tuesday and then up 1% today, closing just under the 8-day EMA. Let's see if we can get over that on Thursday. And then the last thing, ARKK, like to test just to see if growth stocks are catching a bid. This is more and more correlating with the stocks that I wouldn't want to own anyway, Teladoc, Roku, a lot of the stocks just coming off the bottom. And you can see we did have a pretty nice rally, whatever, from 43 to 53, not even an insane rally, where a lot of those oversold stocks or really beaten down stocks lifted off the ground for a couple weeks. But you can see those are the ones really pulling the market down, while a lot of the individual leading stocks are holding up well. So those are the 4 ETFs and 4 ETFs that I wanted to cover, indexes that I wanted to cover. If you have any questions about that, drop it in the chat. Otherwise, I just want to go through quickly the leading stocks that I've identified that I either have a position in or looking to start a position in, or just using as a gauge to the market risk. First one is Celsius. I do have a position in this, not as much anymore. I've been scaling out the last 2 days here, but this is one, if we go to the weekly chart, a really nice cup, and then just 3 weeks putting in the handle. Not really a handle where we dragged down, which is surprising to see given what the indexes were doing. But this topped out a little bit before the indexes topped, as leaders do. They bottom before the indexes bottom. They pull back before the leaders pull back. And this came into the 21 EMA on the 16th, on August 16th, held that area perfectly. So I'm trying to be creative, get some money, not a huge position, but at least get some testers back into the market as we were pulling back in. And Celsius was a perfect example of an undercut and rally here on Monday. So I was looking at that 21 EMA thinking, okay, this held last time. This is a stock with incredible earnings, incredible sales, great fundamentals. The group strength, not super strong, 50th out of 197, so B plus group strength. But accumulation distribution ratings, A minus, meaning many of the up days come on heavier than average volume, many of the down days come on lower than average volume. So that's showing that the stock's being accumulated by typically institutions. It's not usually retail just driving it up. Overall composite rating, 99, strongest that MarketSmith gives, along with individual relative strength, 99, strongest MarketSmith gives. So this was checking all the boxes of a stock that I wanted to find a way to weasel myself in. So when we gapped down on Monday and we gapped right to the 21 EMA, a little bit under it actually, but once we reclaimed the 21 and the low of the day on Friday, that's when I started my position. Was able to scale out a little bit that day at 2 times my risk, 1 time my risk, something like that. And then basically had my stop at the low of the day. So very, very low risk at that point. And then we got great follow through on Tuesday while the market was basically flat. Good follow through today. I sold another piece at like it was just under 115. So that's looking strong. And this was a stock showing that decoupling action where a leading stock is breaking out or holding up relatively well while the market was down 2%. This was up, not 9%. Where is it? Up 5.4%. So great action out of Celsius. Another leading stock that I started a position in, same mindset, is Enphase Energy. Solar stock is the number one strongest group of the market out of 197. This has a 98 earnings per share rating, A+ group strength, A- accumulation distribution, 99 composite, 98 relative strength, great earnings, great sales, great after-tax profit margins, checking all the boxes. Let's find a way to weasel into this. And with that gap down, we undercut the 21 EMA. And same with Celsius. I started my position as we overtook the low from Friday, basically closed at that area on Monday, pushed a little bit higher on Tuesday, and then today we really got going back over the 8-day EMA, and I was able to scale out a quarter at I think 7%, 7.5% there. So reducing my risk along the way. Don, you're covering one of the stocks that we'll cover on the watch list, but really nice action here in a strong group. Let's go a little bit quicker on these. TMDX, I don't have a position in this, but medical products, that has been a group that is working well. And this is another stock that is breaking into all-time highs and holding up well while the market was down big. So while QQQs were down 2.6%, this was up 3.25%. And then we just rallied from there, push into all-time highs. SWAV put in a new all-time high today. ON Semiconductors. Semiconductors have been kind of leading the market down. So the fact that this and AEHR were holding up so well until today is really good sign of strength. The old semiconductor leaders, AMD, Nvidia, they're not the focus, at least for me as a swing trader. I want to be focusing on the strongest stocks that even when the market's performing poorly, no one's willing to sell. And ON Semiconductor has been on my watch list basically all through this area and only correcting from 70 to 45 while most of those stocks are still near that, like down 30%, down 40% in the semiconductor group. So we had Nvidia earnings today. Let's check where they're at. They're down 4.5% after hours. So we'll see how this holds up tomorrow. If this pulls into 70 and that 8-day EMA and then catches a bid, that could be a potential entry point right around there. So I actually have that on the watch list that we'll cover later on. But ON holding up. TH, this was on my breakout watch list that I post every Sunday on this YouTube channel. And it actually got going, right? On Monday, it broke out, I think it was up 9% up here to 1550 and then just squatted. And that's one area where, okay, this is one leader that's not acting completely right. It tried to break out while the market was down 2.6%. It didn't quite hold that area. But then yesterday and today, very solid action. I think yesterday was up 6%, 6.6%. Today it was flat. Fine. Very strong move. And this is a leader that's not breaking the 21 EMA on heavier than average volume, anything like that. Squatting's not ideal, but it's not, this stock's breaking down. So that's another leader holding up. PRVA broke out 15% on Monday. This has been a stock on the breakout watch list many weeks ago through this 30 range. And then as it pulled in through 33 here. So really nice action, getting going. That's what leaders are supposed to do. CLFD also holding up really well. Cannot find a way in this stock just yet. It's just rising that 8-day EMA, a little bit extended in the short term, but the fact that it held up through the market sell-off and it's a leading stock, that's good action from a leader. Two leading stocks that just started to show some weakness today that I wanted to cover is AEHR, because I don't want to just be 100% bullish all the time, right? We do this, we keep this list of potential leaders so we can see how the market's acting, not just the indexes, but the individual stocks that we want to be owning. So I think we just went through 8 or so potential leading stocks. Those are all holding up well. AEHR, also a semiconductor stock, had been holding up well, actually broke into a new high for the year, or I don't know, January. No, not quite the year, but basically since the lows, a brand new high. And then we reversed today, closed down 8.6%, breaking under the 8-day EMA on heavier than average volume. So this is the first leader that's actually showing some signs of weakness. Now, a couple low volume days pulling back to the 21 EMA where we consolidate there, then it's a chart that potentially we trade in the future. But this type of reversal is just something that we need to be cautious about. The other one, CPRX, biotech stock. Biotech's third strongest group in the market out of 197. A lot of the stocks that I was trading today were in biotech, and this is one that had been leading, and then actually it caught up a little bit better, but it did fall pretty heavy down to 13.01, held $13, so that's good to see, but at least needs some more time, maybe allow that 21 EMA to catch up. So out of the 10 leading stocks that I'm keeping track of, only 2 are showing any type of distribution, and that's a great sign while the indexes are under their 21 EMAs. All right, any questions on that? You can throw it in the chat. I see you're covering, between Don and Randy, we got a great watch list going already. I think all 3 of those are on mine, so let's just start with that. ARRY, also in the solar group. I traded this today, but I sold this into strength really quickly. I didn't get a large position size on it, so I sold it for like 3%, 4%, something like that. But energy solar, number 1 group in the market, so that improves our trade probability. If we're buying the strongest stocks in the strongest groups as they come out of a consolidation or a pullback area, that improves our trade probability. A+ group strength rating, A- accumulation distribution, 90 overall composite, 99 individual relative strength. These last earnings, they crush it. Earnings up 350, sales up 116, after-tax profit margins improving. What I had this on my breakout watch list coming into the week, thinking on Monday, if there was market weakness, we might hold this $20 area, and I could start a position as close to 20 as possible, and then kind of use 1980, 1975 as a stop loss, just because it's in no man's land between the 8-day and the 21 EMA. And the fact that on Friday, when things started to kind of pull back in the market, the indexes started to pull back. This pulled back pretty heavy, 5.7%. But the low of the day was at 20.03. So I was thinking, okay, that $20 area held on Friday. If the market's weak, I want to see that $20 area hold again. But right away on the open, 20 didn't hold. It broke down, but new low of the day, 19.50. That area did hold. We got a bounce at the 21 EMA on Tuesday, and a pretty good closing range on both of those days, 72% on Tuesday, 83% on Monday, while the indexes closed at the low of the day on Monday, and then basically flat on Tuesday. So today, breaking over Thursday's high, that was an area that I was watching, 2093, and I didn't get much size on it. This is still kind of a looser pattern. If we go to a 15-minute chart, ignore this last piece because that was today. But going into that entry point, this is pretty wide and loose action still. So I couldn't put a ton of position size on. It wasn't a super clean entry point, anything like that. So it was a leading group. It was a stock that I wanted to at least test out. And I got it going for about 3%, just sold it into strength. But now, coming into tomorrow, I really like this action. It did pull down, still kind of exhibiting that wide and loose action. But then we really tighten up just above 2150 is a potential entry point. I'm looking at 2155, just over this high here. Or if we gap up over 2150 and then come back into 2150, that's also an area that I would want to keep a watch on. So that's ARRY. Great job, Don, bringing that up. Next, we have another watch list stock, and I do currently own this one, so full disclosure, I'm not trying to get you guys to pump the stock. It's just something that I'm watching. I don't have a super large position on it. This is AMPS. This is technically utility electric power, which is still a strong group, 24 out of 197, but it is grouped with that solar electric energy for commercial and residential customers, so some type of solar theme to it is at least something that we want to be watching. Nice move up, and this is a relatively thin traded stock. Average for the last 50 days is 812,000 shares traded. So depending on your account size, maybe this is too thin for you. But the way I trade and my account size, I'm not moving billions of dollars or millions of dollars, so not too much trouble there. Really nice move. I mean, very, very strong earnings as well. Fundamentals are there, but moved from 6 basically to 12, definitely in less than 8 weeks. Now we're pulling back to the 8-day EMA on very low volume the last 3 days, lower than average volume. And then today, I actually put this trade on basically right at the open today. As this was coming in, it formed a pivot just under $11. Where is it? 1 second. Yeah, right under 11. So once we gapped up over 11, I bought that. It came back in, didn't hit my stop, and then we closed slightly above. So I'm up like 0.5% on this. But really like how this is rolling out. Looking for an ad spot around 11:15 tomorrow, especially if the market's strong. That's AMPS. Next we have CEG, Energy Alternative Other, fourth strongest group out of the market. So same type of renewable energy theme that we're working with. This is something that I've seen a lot on Twitter, a lot on not as much as on StockTwits, but a lot on Twitter. A lot of the swing traders are watching this one. So when that happens, I typically tend to sell a little bit more of the position into strength on the initial breakout, just because if everyone's watching, and the people that I follow on Twitter all have relatively similar like swing trading themes or swing trading strategies. So I know a lot of swing traders are going to be watching this, and if they're all in this name, they're all going to be taking profits a little bit quicker than long-term position holders. So just with that in mind, whenever I see a name heavily populated on Twitter, I typically try to sell in strength a little bit quicker than usual, or at least a larger portion of mine. I bought this yesterday as it broke over Monday's high, but it hasn't been doing anything wrong, hasn't hit my stop yet, so I'm still in it with just like a 5% position size. I want to size this up a little bit more on a quick breakout, so I would buy with a break over today's high, 880, 882, whatever, and then try and quickly flip at least a portion of that. And then between that and my tight stop loss, I'm taking the risk out of the trade. And then if it does want to keep going higher, then that's great. But with swing trading, it's all about just moving your risk up. And one thing that Mark Minervini always talks about is improving the worst case scenario. When things are going well, it's exciting, you're making money, your P&L is all green. Everyone's like, or a lot of inexperienced traders, and what I would do for sure a couple years ago, I would just be excited, keep adding exposure. And then when we do get a flush, I would be getting flushed on 100% of my account in the market. So what I don't want to be doing anymore is that I want to be rolling my risks or rolling my stop loss up to even as quickly as possible, maybe taking some profit on the way up so I can eliminate the risk on the trade before I put on new exposure in the market. And that's kind of how I'm playing this one. I have a small piece on already. I want to build it because if this does get going, I know a lot of people are watching this, it can break out, and then I'll flip at least a portion of that into strength and then either move my stop or keep my stop even where there's no risk on the trade. But yeah, strong group, has that pop potential, really consolidating well. I mean, when you see tight price action and tight volume action like you're seeing down here, that just means the disagreement on this move is getting less and less. When you see a stock break out 30% or something and then immediately pull back 15, 20% and then bounce another 7%, that's huge volatility and huge disagreement in that price action. When you have very tight price action and tight volume, we get a move from 55, 60, whatever, up to 80, and everyone's fine with that move. No one's rushing to take profits, not even short-term traders, because you would see a quick break under the 8-day, down to the 21 EMA, and we're not seeing that, at least not yet. And we're not seeing that even when the indexes did break the 8-day, did break the 21 EMA, and that's why I'm keeping this on a watch list, even though everyone else is watching this as well. One stock that I posted on Twitter, I think yesterday, was Coco. Another very thinly traded stock. Average shares 343,000. But this is a nice kind of cup. tight, not a handle just yet, but it is tightening up. If we go to like a 15-minute chart, you can see good VCP action on like a 15-minute candle. Recently, we pulled back to 1550. That got supported. So on market weakness, I want to see 1550 supported as well. And then just a break over this 1575 is a potential entry point. But on these thinner traded stocks, if something happens and people are rushing to sell, you're going to run into an illiquidity issue, depending on how big your position size is. But still, I'm trying to form good habits for when I'm rich down the road, where I don't try to take too much position size on a trade that can quickly go against me like this. So it's one that I'm watching. It's a quality setup on the right side of the base, tightening up. Earnings not great, but it actually popped on that earnings. So I don't know what they said in the call, but it was up 17% on 240% average volume that day. And now we're tightening up. So look for 1550 or the break of 1575 there. All right, let me check the comments really quick. GFS. All right. CRDO is next. I thought this was going to be a potential leader. We had a really nice launch pad set up where you have the 8, the 21, and the 50-day moving averages all within 1%, 2% of this of the price. And then this was on July 25th. I posted this on Twitter, just kicking myself that I didn't take this trade, because when you have all those moving averages and they start to curl up on you, actually I should be doing it the other way, it's reversed for me. When they start to curl up on you and you have price above that, quickly you're going to see some type of stronger price action. And you got that to the upside, up 8% one day, the next day up another 10%, third day up 9.5%, and then the fourth day up 5.5%. So explosive action off of that launch pad. And then we got extended in the short term. We're pulling back to the 8-day, now to the 21. We've undercut that a couple times. But we are tightening up the last couple days, and this is another one where we're building out this pivot right at $15 over the last couple days that I want to keep an eye on. Break over 15, potential entry point there for CRDO. Someone put this in the comments, GFS, who was it? It was Randy. Randy, good call with GFS. This is another semiconductor stock. Again, Nvidia down 4.5%, 4.6% after hours. So we'll see how these semiconductor stocks hold up tomorrow at the open. But this is one similar to ON Semiconductor that I've been keeping tabs on kind of all throughout this bear market. Got going 36 up to 65, so not quite a double off the lows, but a nice price action. Quickly getting through the 8, the 21, and then we broke this 50-day on really strong volume. What was it? 92% more than average, closing up 8.6%, and with a strong close range of 90% there. Follow through the next day, consolidate, push through again. So this type of accumulation pattern where you're breaking out on heavier than average volume, you can see these volume bars are above the 50-day moving average here. And then you pull back on lighter than average volume, you can see the gap to the 50-day there. That's signs of accumulation, which is great to see. So now that we got extended, semiconductors are leading the market down. This is also in the semiconductor group. So the fact that this, didn't even test the 21 EMA yet is showing great strength being within that group. So pull back into 60, 2 daily highs right around the same price, just above the 8-day EMA. So breaking over that $59 area, or no, not 59, sorry. 61.60, 61.34. So between one of those two highs, potential entry point right there. If semiconductors kind of find their footing, we'll see what Nvidia does. If Nvidia just brings everything down, then GFS and ON Semiconductors that we'll cover right now just need a little bit more time to set up. Charlie, how's it going? And Randy, I'm glad you're enjoying this. If you guys are enjoying the live stream, please do me a huge favor. If you're on Twitter, you can retweet my tweet. It's at Nick Drendel there, or just leave a like on the stream. That helps the channel and helps YouTube push this out to more traders. And make sure you subscribe to my channel. I want to be doing these live streams once a week again, and then do other fun trading videos. So we talked about GFS Semiconductor stock. ON, we covered this a little bit earlier. right near the highs, all-time highs. Not many stocks are near their all-time highs. That's what makes it a leader. Even in a relatively weak group, this pushed all-time highs on Thursday. Then we pulled back, undercut the 8-day, reclaimed that on Tuesday, pushed higher on today, on Wednesday. So if semiconductors, oh man, Charlie's taking notes. If semiconductors are pulling back, watch this area, $70. If this can hold while Nvidia is down 4, 5%, 6%, whatever it does tomorrow, that would be a great sign for this individual stock and other leaders. So we're always looking for more kind of confirmation. We're trying to gather as much information in the market as we can. And if leaders are holding up like ON while laggards like Nvidia and AMD are pushing lower, that's a great sign. As long as we're focusing on the stocks that are the right stocks to focus on, like ON. So let's see how this $70 area holds tomorrow with the gap down. I see we're down 0.44% after hours. That doesn't mean too much there, but very strong fundamentals. We got a B+ accumulation distribution rating, 92 earnings rating, 98 composite, 95 relative strength. Number 1 in the group out of 31 on overall composite rated. Number 2 on relative strength. Doing all the right things. Let's keep this on a watch list. Another biotech stock that I've been keeping track of is NBIX. This is one that got out, let's see, 8.5%. So nothing crazy here, just flagging out. I think there are other setups that already got going in the biotech, and now people are going to be like, oh, like SRPT broke out. I bought this today at a 110 right through yesterday's high. What are the other biotechs I bought today? PLRX, that was another one. Got going about 6%. Nice move over 1980, yesterday's high. Suave was no, not a biotech. What am I thinking of? Oh, our last one that we'll cover. But anyway, NBIX, the more setups that you have within an individual group working, the better likelihood that you do get going to the upside. And once you get one stock breaking out, that brings some eyes. The problem is we've had a couple days where biotechs are breaking out, and that could go for longer than you expect, but just know that we're not on day one of biotechs working and breaking out. So let's just keep an eye on this NBIX. It's not going to be, or not likely to be, one that rips your face off, because when it did break out, it still only broke out 8.5%, which is nice, but not crazy. Just good consolidation there. The one that I really wanted to cover, the biotech that I wanted to cover, is RYTM. And full disclosure, I did buy a position in this today. I want to add to it if we get a break over 25 tomorrow, but this is one that has been on our watch list after, I think it was this day, on 7/13. Massive volume move. 1,576% times the average volume on this, with a closing range of 96%. That's telling you that institutions are building positions, and they're not done building positions if the closing range is at 96% with that type of volume. You get a pause day under the 200-day and push again. Just look at the volume pattern. If you kind of, I don't know if you can zoom in, but basically all the blue bars where the stock finishes up on the day are above the 50-day moving average. All the red or pink bars, whatever it is, purple, are under the 50-day moving average. And now we're starting to decline a little bit just because of how powerful that one bar was. But we pulled back into the 8-day EMA here, tightened up, got out, and then I did buy this, but then we had earnings right around the corner, so sold right away. Unfortunate for me, because it did rip here, kind of pulled back again to the 8-day, and now we're doing the same thing. It wouldn't be the worst thing in the world if I did get shaken out and we allow the 21 EMA to catch up and this actually builds out a little bit longer of a base. But I took this with a break over yesterday's high, right at $24, or a break over 24, I think. I think my entry was 24.08 to be exact. Yeah, right around there. It got going a little bit, nothing crazy. I did sell a portion of it because I just don't like holding a large amount of any biotech overnight. That's why you see I have many biotechs that I'm holding that are actually working, but I didn't put a ton of position size on any individual one. maybe I'm a scaredy cat. That's fine. I've seen what biotechs can do overnight, and I don't want to have 25%, 50% of my portfolio in one that goes down 50% overnight. So I'm kind of spreading that risk over a couple quality setups. But this one has that power, has that potential. It just shows you with the volume, with the price action, how it respects the moving averages. This is something that, at least up until this point, has been a very, very strong stock. And it's worth rolling the dice where you can keep a stop at 3%, 5%. If this can go 2 times the risk, 4 times the risk, 5 times the risk, even if it gets back to the previous high here, that's, I think I calculated that was like a 20% move. Well, that's 4 times your risk if you have a 5% stop. And with the theme, biotechs being strong, with the pattern that this has been building out, it's, I got to be careful, not financial advice. It's mathematically worth a risk, your risk to reward there. So that's RYTM, kind of my main focus outside of AMPS and CEG going into tomorrow. And finally, and who said this? Wolf. I want to give them credit. Don again, crushing it, Don. Wolf Speed, another semiconductor stock. This had an HVC on the 18th, high volume close here. Let's see, what was that? 92% more than the average volume there. We kind of pulled back while the market pulled back. You can see the S&P 500 up here pulling back in. Actually, we broke over the HVC on Tuesday, but didn't close over it. We did close over it today. So now I'm looking at this along with ON, along with GFS. If we have weakness in the semiconductor group, which Nvidia is down 4.5%, so I'm guessing we will tomorrow. If this can come into that HVC area, which is what was the close last? 112.94, call it 113. If we come into 113 and hold that area, that would be a potential entry point there, and then zips out on strength. So that's WOLF. All right, let me switch to some of the comments. Keep the questions going. Keep all the comments coming in. I just need to read them for a second. And then we'll go through just some of the stocks that I'm personally holding, just for full disclosure there. Okay, Don. Okay, you talked about Tesla split. Yeah, 3-to-1 Tesla split. I believe it's tomorrow, right? You can correct me in the comments, but 3-to-1. So what are we going to open at tomorrow? Right around $300. We'll see if that does anything. I don't understand why. It just has to be psychological, because nearly all brokerage now have fractional shares. So I don't really understand why stock splitting has that much of an impact, because fundamentally there's no difference to the price. You're just taking that piece of pizza and cutting it into whatever you're splitting into. So you have the same amount of ownership in that stock. So we'll see if that does anything. I like how Tesla's acting. I wish it would have closed over the 200-day today, but we're still kind of in wait and see mode there. Workhorse. This is a stock I have not even checked in a long time, and that's why. Okay. Yeah, Workhorse was a stock that I traded back in 2020, right through here, got out, a little gain. Yeah, one thing that you want to kind of be careful of in these topping processes is once you break that 50-day moving average, which is this red line, this is the 10-day, 50-day, 10-week moving average. Once you break that on heavier than average volume, that's almost always a sell signal there. Just as when you break over the 50-day moving average on heavier than average volume, that's a changing character. So when we got that in February of 2021, along with all the other growth stocks breaking their 50-day moving average on heavier than average volume, that's when you were like, okay, this is a risk-off environment. I got to get the heck out of these growth stocks. They just don't demand my attention when they're under the 50-day moving average. So once that happened, this stock was kind of done for me, and it looks like it was kind of done for everyone else there. Got the same rally that all the other oversold, beaten down stocks got, and now that's done as well. So what you got to ask yourself is Workhorse the best stock in the market? There's 10,000 stocks in the market. You can own any stock. Does Workhorse demand your capital, demand your risk, or is your risk better off in another stock, another leading stock? I'll let you decide that. Okay. Ali, let's check Ali. This is a stock. Ooh, Okay. Yeah, this was a stock that I've been watching for a little bit through here. Got going. Let me check a weekly chart on this. I don't like all this up top here, but you could still rally a little bit. 65 to 780. What is that? 15. Earnings in 8 days. It's forming a nice pivot through here. I mean, this is definitely buyable through 65.70. It says cup and handle on here on MarketSmith, which is kind of cool, but kind of confusing why earnings sales are down and the stock is rallying. Discount variety. I think Dollar Tree, did they report today at the close or tomorrow? In that same kind of group. So a lot of that will be dependent on how Dollar Tree acts out tomorrow as well. So, I mean, this is a nice pivot you got going. Definitely could be buyable. I don't know how much power you're going to get in this. And since we've had leading stocks actually working out, both in like solar, also energy stocks, which they're a little bit extended now, but those typically have a little bit more power that I want to be trading versus getting super excited about a 4% gain on Ollie or 5% gain on Dollar Tree. I tried playing that back in, I think, February when Dollar Tree was setting up, and it's just not as exciting and not much worth your time there. All right, let's see. Love this. Thank you, Randy. Appreciate that. All right. NRIX. Let's take a look at it. Oh, wait, is that NRIX? Okay. This is the first time I'm looking at this stock. So average daily volume, that's the first thing I typically check. 522,000 shares. That's fine for my trading. A little bit on the low end, so I'm probably not going to size it up unless there's a super tight entry and I can quickly kind of scale out a piece. Also under the 200-day simple moving average, I really try to avoid that, especially 200-day that's declining. Along with this distribution candle here on above average volume, breaking under that 200-day very quickly after reclaiming it. So a lot of things here that I'm trying to avoid. So volume's a little bit lower than what I would like. We're under the 200-day, and we had this distribution candle. And there are so many quality setups in biotech. I think there's just better opportunities. Now, I'll say that tomorrow it'll be up 50% and you'll hate me. Please don't hate me. All right. Charlie bought PLRX2. There we go. All right. What levels am I watching if the market pulls back? So I'm not trading S&P 500 or the QQQs, so I'm less worried about the indexes than the individual stocks that I'm holding. But what I really want to see is, before I get very aggressive, like I've put on a relatively large number of positions, but all either like 5% or 10% position sizes, because we're still under this 21 EMA, and because we've done this before in April after we tested the 200-day, where we gap down, consolidate for a couple days, and then gap down again and really start accelerating down. So there's precedent on both. Like, there's two valid like directions the market could go, and I'm not incredibly confident in either one. I am pulling a little bit more bullish because we're seeing those leaders hold up so well and break out, even while the indexes are just kind of flat under these moving averages. But before I really press the gas on anything, I really want the indexes back over at least the 21 EMA. I know something Brian Shannon said on Twitter today was any rallies that occur while the indexes are under a declining 5-day simple moving average are guilty until proven innocent. And he's a pretty smart guy. I've learned a lot from him. So, I mean, we don't want to change everything that we're doing based on what we see on Twitter. And I'm not. I'm 60% invested at this point. But it's less so what the indexes are doing. Like, this could start gapping down. And likely with another move down, then you're going to start to see more leaders fall. We went through the leaders earlier in the stream. 2 out of 10 are showing some distribution. You'll likely see 5 out of 10, 6 out of 10 starting to at least break under the 8 and the 21 EMAs if we start to push lower and break under the low that we've seen in the last 2 days. So what would be like the best case scenario, absolutely perfect, is if we gap down tomorrow and then quickly reclaim the low and start to push up while the leaders hold up. Now, I mean, this is me wishing, right? I can't command the market to do anything, but if I had any influence on the market, that's like the perfect scenario that I would draw up. But it's, yeah, like I said, it's less what the indexes are doing and more what the individual stocks that I'm holding are doing. Are those coming back and hitting my stops? So far, I've been stopped out of 2 stocks this week. DOWN, which it stopped me out and then worked well. And the other was Fold, another biotech, which stopped me out yesterday and was up 5.5%. So even when I'm wrong, I'm right. And when that happens in the market, it's usually a good time to get some exposure on. So if I start getting stopped out and then I'm happy that I get stopped out where I get stopped out instead of getting a little frustrated, then it's time to pull back, take your foot off the gas even more, and relax there. Great question, Don. Your time frame seems to be pretty short for a swing trader. Yeah, Randy, just because we're under that 21 EMA, I'm a little bit more cautious. Like I said, I'm not trying to hit any home runs. I think Celsius has been one of my largest gains recently with a 21% move where I sold my last piece. I still hold a little bit, but my last sell was for a 20% gain. We're just in an area where we could quickly just gap down and start the acceleration to the downside. And I'm going to be a little bit more cautious. And once I start to see, okay, I've held a stock for a week and it's up 20%. And now my average gain on my last 5 trades are 7% or 10%. Once your average gain on your last couple trades start increasing, that's also a sign that you can start to hold positions a little bit longer. The market's more constructive. Where right now I'm just trying to get some footing because I did get a nice short like near the 200-day simple moving average on SPY. So I went from pretty heavy short right around that 200-day to starting to build positions. And now it's got to be, the market's got to prove itself to me there. So TUP. Is this Tupperware? I traded this back in 2020. It was a wild trade. I mean, super tight action, broke out, tight action, broke out, and then rolled over. All right, I haven't seen this one in a long time. So, huge gap down, a massive volume. See, under the 200-day, I don't know. I'll miss out on this, but maybe it's a good swing trade. It's tight action, but the fact that we broke on such heavy volume and now we've rallied up. I guess that is after another earnings. I don't know what they said in the earnings call, but let's see, up 32%, up 14%. Still under the 200-day. There are better options out there. Is this the number 1 setup in the world right now? Or top 3, top 5 that demand our attention right now? Under the 200-day, not for my strategy. How do you treat a huge gap down on the left side? Yeah, so I don't love it just because there's so much distribution here. And there are people that don't trade with stops that built a position right before earnings and got burned here and then refused to sell on the way down. And now it's coming back up. So there's going to be pockets of sellers. It just makes for typically a choppier right side of the base that at least from what I've studied. So I try to avoid that. ARGX, I think I know. Another biotech stock. So average daily volume, 304. So a little bit more illiquid. Good accumulation distribution, A-. Weak composite, that doesn't usually do much with biotechs. Those are usually technical plays. Kind of wacky action though. Yeah, just because it's so thin, I think it trades very choppy. And if I'm using, so typically my stops are like 2%, 3%. If I can't get that on a trade, or if I can't, 5% is like the max stop that I'll use on anything. And this is just like kind of all over the place. It's all over the place on the way up, but your perfect kind of time here was right through this 2-day pivot, 370. Now it's a little bit extended. I don't want to be chasing that higher when there are better setups. REGN. biotech. Yeah, broke under the 200-day. Not on heavier than average volume, but under the 200-day, right at the 50-day. Is this the number one setup, top 5 setup in the market right now? I don't think so. It doesn't demand your attention. Earnings were down 62%. Sales were down 44%. It's not screaming this is the best setup in the world. So I'm trying to do less trading and more just watching and learning. XBI, this is the biotech ETF. Hold on, I'm going to take a drink of water. I've been talking for an hour now. XBI, so this is the biotech ETF. Rallied right up to the 200-day simple moving average. This is also why I'm a little bit worried about adding any new biotechs like tomorrow. Now this could rip through the 200-day and then it's like, biotechs are back, baby. Or it can reverse here. So I tried to put on some positions Monday and Tuesday in biotech, scaled a little bit into strength, and now we'll see how this 200-day handles. We rallied up. I mean, biotechs are a leading group in the market. We definitely want to keep track of how this acts. I know someone posted, I think it was Mayhem Yeti on Twitter, posted that this just tracks the 34-day moving average perfectly. I haven't heard of that moving average before being used, but it's nice to see. And yeah, this pulled back. I was pretty bullish into this flag above the 200-day, and then it broke the 200-day. We had 4 days down. We led on the way up and then led on the way down, and hopefully we're leading on the way up again as well. So we'll see how this 200-day moving average holds tomorrow. Ideally, we just break through that. I do have a little bit of LabU in my Roth IRA right now, but I've been selling that into strength. So we'll see. Small caps holding up. Yeah, small caps are definitely doing better. So IWO, growth ETF, IWO, that typically tracks smaller caps. Definitely holding up better than the indexes, and leading stocks are as well. So definitely want to kind of keep exposure in that area versus lagging names like Meta. Oh, wow, that's even lower than I thought it was. What's Netflix at? Not great. Nvidia is right near the lows. So a lot of these big cap names, other than Apple, Apple had this frozen rope all the way through the 200-day, almost back to previous highs, and then we break through that frozen rope. When you get this type of really tight action for a very long time, once you tend to break that area right when you break through the lows of the previous couple days, it's usually a pretty quick pullback, and we got that to the 21 EMA, and this is what's bringing back the indexes as well. So if the 21 EMA holds on Apple, that's a good sign for the indexes as well, and then we can get going on the right side. 20% gain on Sell H. Did you buy the pullback at 21? Yeah, Charlie. I talked about that earlier in the stream, but basically I've been trying to weasel myself into this stock for a while now. So when we gapped down on Monday, really heavy on the indexes, this was like my main focus stock. And the low of the day was basically right where it opened. I think it went down maybe 50 cents or so. But when it came back through the 21 EMA and then took out Friday's low, that was my oops reversal entry point. And then I've been selling little pieces into strength on the way up. But I do want to, this was only a 10% or 10% in one account, 15% in another account position size for me. So I didn't like hit it out of the ballpark with tons of size or anything like that. I'm not trying to like brag. It wasn't a huge position size. But if this starts coming back, pulls back into the 8-day around 105, then I do want to like really start pressing if the market finds its footing as well. Don, HRL, Hormel Foods, okay. 35th strongest group in the market. Nice. Starting to look a little frozen rope-ish on the way up. I don't see a clear pivot to like start a position, but it's not doing anything wrong right now. Has earnings in 8 days. Also, food and meat products typically aren't like the breakout type setups that I trade. So if this is just like a long-term hold, or you got in lower on this, I don't know, $48 area when it broke over the 200-day and the 50-day, then you're in good hands. It's been riding that 8-day. Maybe sell a piece if it breaks under the 8-day, something like that. But all right, FLNC, too late now. Yeah, this is a nice move. Why was this not on my watch list? Average volumes, 1.2 million, 1.3 million. Strong stock, strong group. Huh. I don't know why this didn't make my watch list before. Oh, is this the 200 day? Yeah, I have a scan that like takes out stocks under the 200 day, and it looks like it was just under that on Friday when I did the scan. Shoot. Yeah. All right, so if it's going to be a leading stock, it's going to break out, consolidate like it did, and set up again like Celsius did on the way up. So now I will put this, let me write this down. Thanks for bringing this up, FLNC. Yeah, thanks for bringing that up. GTHX. I did have this on my watch list, just didn't take it on Monday. Nice move. It kind of got going and squatted on Monday and then ripped on Tuesday up 9%. But another biotech stock, quality setup. This one above the 200-day, 50 days in an uptrend, doing a lot more of the right things that we're trying to look at. Didn't make my breakout watch list that I post every Sunday because I can only talk about 10 stocks, really keep the time frame down. But nice kind of pullback to that 8-day. Had just a break over Friday's high as an entry point. Could have been a trade. I didn't take it. Danny, congrats if you did. Really nice setup there. HDSN. Okay, yeah, I need to write this one down too. HDSN. Really nice action. Okay, ARIS basically at the 50-day as well now too. Yeah, I always look for within the same group, like at least some of the stocks that I'm familiar with, are they also setting up? This is definitely the leader in that group, but man, nice cup handle right at $10. Charlie, you're awesome. Thanks for bringing this up. I'm gonna at least put this on the watch list for tomorrow. All right, Jack, what's up? What's up? NVTA. It had huge earnings gap and went crazy. It looks like it's turning back after the week. Oh, yeah. Yeah, anything under that 200-day simple moving average is just a no for me for the most part. It looks like it rallied right up to it. Let's see, what was the high of that day? High was 9. The 200-day simple moving average was 960, so it was still below that on that rally and then quickly reversed. So what you want to see in these moves is if you get a big first day and you're still below a moving average, do you see follow through that next day on heavier than average volume? So look at the 50-day moving average of volume. Do you see a second day above average volume where you push higher with another strong close? It's hard to tell on this, but it looks like it just immediately reversed and you would have been stopped out pretty quickly. And then now it's well under the 200-day, under the 8. Not something that I would be looking at trading. Had a nice day today, but under $5 as well. Institutions typically don't build large positions, and the patterns that we can really take advantage of where we just climb into a stock as the institutions build their positions, which builds the uptrends in stocks. You're not going to get that typically in a $5 stock. If it gets up to $10, $15, I know Oliver Kell, who won the 2020 U.S. Investing Championship, his kind of threshold is $15 on his scans. So I'm a little bit more loose with the stocks that I look at, but $5 is a little bit low for me. But thanks for bringing that up, Jack. WSC, and then let's see. Commercial service lending, 111 out of 197, so C+ group strength rating. But this has to be the best stock in the group. Yeah, number 1 relative strength, number 1 accumulation distribution, number 1 overall composite rating out of 17. Very strong fundamentals. Provides, yeah, storage has been catching a bid lately too. I just don't know how much power storage has, right? Like, you think typical growth stocks, storage? I guess maybe, but I mean, quality base breaks out, pulls back into that area. I'd like to give this a little bit more time just because it's not like a typical rip your face off type of growth name. When that happens and the stock really gets going and gets extended, I usually wait to the 21 EMA. Now, if it keeps going and I miss it, there's 10,000 stocks, you're going to miss some. But on something like this, I would rather it like pull back to the 21, bounce, and really tighten up where we get a very, very clean pivot for a low risk entry point. But I mean, we're right at the highs, looking good here. Volumes, 2 million shares traded a day. That's fine action there. So all good there. Thanks for bringing that up. ADTN, I have seen that. Why did I pass on that? Yeah, just kind of wild and loose action. I don't know, unless it comes down to 24 and you got that 21 EMA. Even with that, telecom's a strong group. Yeah, I don't know. This is very choppy action. Sometimes, even if it's the best stock in the market and it doesn't work with kind of within your system, it's just better to pass on. But yeah, I have this on my like world of stocks that I'm looking at, Charlie, just not my focus list. EMBC. I traded this back in, I think it was this stock, EMBC. Yeah, I got to put this back on at least the general watch list. Thank you. AXTI. That looks awesome as well. Another semiconductor. It's probably got a lot. This has a lot of overhead resistance, doesn't it? Not a crazy amount. Cool. Yeah, PLAB is another one that I have a list of like, I think it's like 15 now, potential leaders. Because it's semiconductors and those were leading the group down, or leading the market down, and it broke under that 21. This is kind of wide and loose action as well. We're starting to tighten up a little bit, but I traded this, breaking over, what was it, 2206 for 15%, 10%, something like that. But then you get this distribution candle, right up, more distribution, kind of all over the place, but still holding up well, definitely better than Nvidia or AMD. All right, so I think we're gonna end it there. Thank you guys so much for tuning into the stream. Before you go, I am starting a new series where we're gonna be doing like one-on-one consultations. You send me the last 20, 30 trades that you've taken. I go through, kind of mark up a bunch of stuff. And then we have just like a one-on-one, but also for YouTube. Because if you're having those questions, if you're making some mistakes, chances are a lot of people are making them as well. And I make mistakes all the time. I'm not saying I'm the best trader in the world. I could definitely learn from like what we talk about as well. But I think it's going to be a really fun series because we see financial audits all the time and we see Dave Ramsey get mad at people. I'm not going to get too mad at anyone. But I think it's going to be a really good way to both grow the channel, kind of build an audience and build a community, and have some fun with it too. So if you guys are interested in being part of that, you can email me at stocktrickswithnick@gmail.com. It's in the description below as well. And just put like trading audit, or I forget what I put for the subject headline, but email me and then I'll send you out like kind of a questionnaire and we'll get going from there. I want to do this either once a week or once every 2 weeks. So if you're interested in that, email me. Otherwise, make sure you hit the like button, help me out, subscribe to my channel. I make a breakout watch list video every Sunday and want to be doing more live streams like this. Have a great rest of your week, and I will see you